Test, test. Okay. I think we're recording this time, hopefully. It's gonna be my second time doing this, so let's just get through it. So this is Elf. Previously, we were able to call a 2x last year on Elf. We accumulated on the $61 range. TP'd at around basically a 2x. When I saw this high time frame distribution, this is where I took partial TP here, and then I took all my TPs right here on my profits, which put me at a 2x. Because right here, this is some type of supply that I was looking at for market makers to grab. Yeah. And then now we're actually looking at some possible a bullish price action here that was previously accumulated back in that we caught last year in 2025. Now here in 2026, it looks like we could possibly see a similar price action, right? But yeah, let's talk about it though. So if we had to take it back, market makers back in 2024. Oh, this is kind of cool. I'll just point this out. Quick accumulation for distribution. Boom, came down. Even this, so distribution, and then gap comes down. Lower high for lower low. Now we see market makers are in some type of range. Back in 24, pull your range from low to high. Now we're gonna extend the range. As we can see, market makers made their second tap right here. Boom, 1, 2. This is your third tap. Market makers made a model 1. Comes back up. Now, market makers, this is very important. This is the start of when they started introducing these gaps. Right? Market makers made this gap to push price up to aggressively push the accumulation up. Boom. If we can keep extending it, would be your second tap deviation for the mid time frame. Market makers came back down to fill the gap, wicked it, came back up. So now you know there's your 1, 1, 2. Market makers made your 3. You have a bunch of liquidity right here. Right here. Boom. Perfect liquidity trail up. Breaker structure would have been right here. Comes down. Makes another distribution and distribution. Shorts, you would have shorted either right here, or if you previously got it right here, you would add to your shorts. I'll draw it out. Stop loss before third tap. Your end of range is right here. You had an 8, but the fact that market makers made some type of supply right here. This would have been, and then you saw this distribution. When it got confirmed right here, you could have either re-shorted and double down on your risk and then put this to break even, because now your trade is basically saved right here, or you could have just did this and then not double down. But because this is so clean, I personally would have doubled down, because the liquidity trail right here is just really clean, right? So boom, comes down. Alrighty, made some type of more distribution to come down even further, comes down even further, and now if you can see right here, there's these gaps, right? This is very important. Oh, gap. Okay. So market makers come down. Now we're at the $60 range. This is a 2025 now. Pull range from bottom to top. Market makers made their first tap. Wick comes up here. We're looking for it to touch equilibrium. Perfectly does right here. We can also see that market makers did this tap, second tap, third tap. Not the cleanest, but we can tell that this is some type of distribution market makers made to come down to make this tap. Boom, 1, 2, 1, 2, 3, comes down. First, second, third tap here. Boom. Now this is where this gets tricky, right? You would have tried to long it right here because the liquidity curve is clean. However, as market makers took the breaker structure on the gap, they actually manipulated it right here. Low to top. First deviation, second deviation. So it would have been like this. Boom. Market makers fake came up, even though they did accumulate, right? Sorry, 2 seconds. Okay. We're still good. Okay. So it came up. Market makers did make an accumulation. However, they usually do this type of manipulation to come down to fill even more positions, right? So this is exactly what happened. It came down short, crazy move down. However, on the high time frame, excuse me, high time frame, we are still. Oh, sorry, that's the previous range. I was like, well, that looks clean. Boom, 1, 2, 3. Market makers on the high time frame in the DL tool, making what's called a PO3, right? Ultimate manipulation right here. Comes down. Basically, market makers accumulate right below this DL tool, so it looks like they gave up on the idea of the accumulation, but really they're in the perfect levels to where retail wouldn't expect it, which would be right under this DL tool. 1, 2, 3, extended model 2 right here. So it was a model 1 turned into a model 2. Market makers shorted to make that first deviation right here. Your breaker structure was here at the 52. So I didn't peep this at the time. I was more thinking, okay, they're making the PO3. My thinking was I'm just gonna play the spot safe, and when it comes back up to here in DL tool, which is where it was on the breaker structure, I'll enter my spot. But you could have 100% took your entry right here at the $52 range on the breaker structure, and then stop loss right here close at 49, and you would have literally been down. Not even what? Is that even 8%, bro? Anyways, boom. So we entered. Another reason why it was super bullish for me to enter here, though, right, was right here. Market makers made some type of low time frame accumulation, but this is also what's important. When market makers make this like consolidating movement, you know in the back of your mind, this is only market makers can do this, because in order for market makers, or just in general, right, for candles to even be condensed and move in a really tight thing, usually somebody like a regular person like me, regular person like whoever, they don't have enough money, they don't have enough position to be able to hold or to even like manipulate price to look the way that they do. The reason why market makers move in these type of schematics and formations is because they're able to do it. They're moving with such size. The reason why they have to accumulate is because they're moving with so much size. Vice versa, the reason why they need to sell this the way that they do is because the amount of size that they're trying to sell, right? So now, knowing that, we know that market makers are the only ones that can do this. So if we put 2 and 2 together, where if it's safe, where market makers would make the breaker structure coming back into this range right here that market makers previously accumulated in the DL tool, coming back up into the regular range, in the back of my mind, I was like, okay, this is a valid way to enter, which is exactly what had happened, right? It came right here, my breaker structure was around here, and that's where I entered. It's pretty far. And as we can see, market makers pushed price up super fast, and then made a higher low for higher high, and then that previous higher low for higher high, it literally just shot up, made the gap. Now, this is a question that I get asked from my homie. Boom. How did I know that I was able to take the price all the way up here? Right? Now, what's important was that previously when I showed, market makers are filling gaps. This is what they do on every chart, but specifically with this chart, bro, market makers are absolutely loving these gaps, right? Market makers are filling every single gap aggressively. Boom. They filled this. I'm sorry, right here. This gap, which is all DL2, by the way, on the higher. Boom. They just gapped it, and then the aggressive movement's up. Right here, there's a gap right here. They literally push price all the way up on the earnings. Now, what's it called? For aggressive moves up like this, the only way where market makers can get away with something like that is because if for some crazy news were to happen, something just came out crazy, or it would be like something like earnings. You know what I'm saying? Like in this case, apparently it came out at a surprise. They were beating expectations by what, almost 2%, which is pretty. You know what I'm saying? It's pretty cool. Oh, and then another 8%. Yeah, that's pretty crazy. Revenue was almost 2%. Earnings was almost 8, almost 9%, which is nice. Which is exactly what I was backing my theory off of this accumulation as well. When I was looking at earnings reports and income statements, balance sheets, but from back then, around the time of this accumulation when I entered, their projected growth for the next like 2-3 years would be like, I think it was like maybe 20 to 25% growth, revenue growth every single year, which is absolutely insane. And if you were following from back then, this is the exact same numbers that was projected on AMD, and AMD had that huge ramp up, and that one was looking like getting 25 to 30%. So I knew something like Elf Beauty, what I'm saying, a product store, what I'm saying, like they're just selling makeup, and then the cost of doing business is relatively low because they're getting a lot of their inventory from China. Everything's manufactured from there, this and that. And then it's around this time as well where Trump tweeted out and made it live where they're actually going to increase the tariffs for goods and stuff. So technically you would think in the back of your mind, oh, that's going to actually make it more expensive for companies like Elf and other companies that's using China as their source of product. It would be more expensive. But because Elf Beauty is, well, one, a really profitable company, but two, because their cost of doing business is very cheap, and they're pushing out their name onto the your everyday consumer brands. I mean, and like stores, like you got your Target, you got your Walmart, you got all those places, your Sephora's, your all that. They're literally in the front row of like the stores and stuff, right? Which is pretty interesting. And then also, they're just known to be really reliable. Their products, consumers use them literally month after month after month, which is something that's very good as well. So they have a strong moat in that as well. And if they're only costing, if their cost of doing business, like say for a product is less than $20, and you're using it month by month, if because the tariffs happen and they rose it by say even 10%, like are you gonna totally stop using that one skincare thing that's on your face just because they ran up a little bit? Probably not. You know what I mean? It's probably not going to do much. And I mean, as we can see right here, it's exactly what is projected right now. If you have a good product, no matter the price, people will buy. And Elf has shown that throughout the years. But anyways, boom, comes up. So with that going on, boom, I knew we could take it up here. But previously, right, market makers made a mid time frame distribution here. So I was looking when I was taking my TPs here at the at the 2x range. I'm taking profits where market makers are hypothetically taking their profits, right? They technically entered here at the 50, so they were better than me. They got almost like a 2.5x. I was more at like a perfect 2x, a 200% on my investment on spot, but still not that bad. I'm basically trading with the market makers here. Market makers on the 2x, they gap price from $90 to $120. Now, this is another thing that we need to break down. When a stock goes from under 100 to more than 100, psychologically, and especially like all the news, CNBC, all of those news outlets, all of your influencers and the trading community, all of that, investors, everything, that brings so much FOMO and like engagement for retail that now they're thinking, oh, if it just went to 100, it can go to 200 bucks, right? Especially if it gap price as aggressive as it did. And if say previously Elf were literally at the $200 level, they're now FOMOing like, oh my gosh, this is exactly what could happen, right? Boom. But what had actually happened was market makers did that, but really to distribute on the mid time frame because they had just accumulated previously and they just wanted a 2x. So boom, they did that. I took profits around here, like I said, comes down, and then basically from there, it was basically GG's, right? Pretty tough. You could have also, like, I took profits from here. There was a low time frame accumulation that I could have held even longer, which would have put me at around the 130s to $150 range. That, because I entered here at the 60, that would only put me at like 2.5 to 2.8 percent gains, which is still good, but it's not something that I need, right? I was just better off to take my profits and I was moving it into another. I think I was putting more into AMD at this point. Boom. But however, market makers did this because they wanted to obviously get a 3x on their investment here. As we can see, if they entered here at the $50, 50, 100, 150, they're 300% gains. This would be a short on the mid time frame right here, which is why, right, you saw that huge sell-off comes down. Whatever the news was, I mean, you know what I'm saying? It is what it is. Oh, 2 seconds, 2 seconds. Okay. All right. We're back. We're back. Where were we? So it comes down, boom. Now we're in today's price action, right? Currently. So we see this huge gap in price. We see that every single gap previously, market makers at some point in time refills. So boom. Pull range from bottom to top because it's making lower highs for lower lows. Pull range from bottom to top. Boom. First deviation right here. Second deviation up here. Market maker shorted this right here on the mid time frame to really create, see, this perfect, oh my gosh, accumulated perfectly on that DL tool to make this the second tap. But even better than that, market makers on the supply created the short to create that even cleaner third tap that we recently got right here. Boom. So 1, 2, 3. We'll make these the big ones. One, two, three, into a what's it called? Internal accumulation. So this is accumulation in an accumulation. Literally, bro, if I saw this in time, I literally would have full ported, bro. I literally would have went to my nearest bank and just full ported. If you see something like this, dude, man. Anyways, let's see that. Hold on. Volato's kind of mid, but still, it's still clean. Boom, comes up. Your stop loss would have been here at the 48. Entry would have been at 50. That's literally not even 5% drawdown. So TP range right here at the end of range at 97. So technically the end of range will be at a perfect 2x for market makers. However, what did we talk about? Because there's this big ass gap here, my expectations is that it actually fills it, actually even goes even higher, right? Back to the 150 range where market makers previously did that mid time frame distribution, which would put market makers back at a 3x, basically 300% on their initial investment again. But do I think, oh, just because market makers got a 3x here and a 3x here, that's what's going to happen? Another reason why it correlates with this so well is that if we look right here, this topping structure right here is very similar, like how it does this, right? It's very similar to this, right? This is very similar first, and then this would be so clean if market makers did this for the high time frame third tap, right? We see distributive price action when it comes up here, exactly like what we see previously, and then it just comes down. That's what I'm thinking. So let's make this even cleaner. Because every single time market makers accumulated up, market makers instantly distributed here in these range. Because here, this was technically the distribution as well. So, what I'm thinking, comes up, fills the gap, right? Comes up right here, grabs this extreme liquidity right here. This will put them market makers at 150. Something around here, this level, my prediction is that we will get some type of news of either super bullish where ELF, something crazy, because it's around the $100 level, somewhere around here. We got to make that circle a little bigger, because if the 100 level is right here, filling this gap, you'll see something right here around this time. Okay, bullish news comes up, retail, now that they think, oh my gosh, it's gonna go right back to 200, market makers start shorting here at 150. They're already up 300% on their investment, so now they're looking to short again, right? Short back down, and then in my opinion, that would be the all-time top for ELF. Which would perfectly correlate with this. Oops. Like this. This is what I'm thinking. I am not a time traveler. I'm honestly pretty what's that word? I'm pretty confident in this chart specifically, because I have been watching it for a while, but it's just the fact that, like, when we're going through it, the gaps, the way market makers just ping pong from supply to demand zones, accumulation distributions have all been really clean on the mid time frame, low time frame, like every single freaking time frame. Also, the TP levels, like, they could have been any other any more obvious, and then now and also, like, the numbers, if we're talking about income statements, balance sheets, something like AMD, where if it also reflects the numbers wise and also the chart, dude, that's like plus 10 confluence. Like, you need a full port that position when you get confirmations on it, which is why I was able to get so much off of that AMD trade. This is exactly reflecting off of ELF. You know what I'm saying? And just because, and also because ELF is just such a good company, it makes so much sense why market makers can play the way that they do on this chart. You know what I'm saying? Especially with the news going on right now about tariffs, China, all that. I mean, you know what I'm saying? Connect the dots. Now, one more thing, because this video is getting really long now. I want to just briefly talk about Estee Lauder. This is a more pricier brand of ELF when it comes to makeup products, skincare stuff, I believe. Basically here, if I'm not mistaken, we are technically right now in we are in a distribution, right? And your breaker structure was around here. And market makers right now would be in the middle of redistributing right here, so coming down back down to your $50 levels, or market makers, because we also have this, right? This is all liquidity right here that market makers could take out. What could also happen is that market makers made this mid time frame distribution just to come, oh, that's the wrong tool, just to come down to make an accumulation, right? And then it would actually be following, it would actually be correlating and following what ELF is currently doing, right? It grabs this extreme supply up here at the 116, and then it just dumps. And then that would be the all-time high for that. That, or of course we can get a model 1, right? And then it comes down. Either or. 1, 2, 3. I just more would like to see a model 2 because the first tap right here is still considered really short for me. You know what I'm saying? Or you can even, that's actually hella clean. This is actually way cleaner. I did not see this. This is some type of accumulation right here. This would have been your first tap. This, honestly, it can go either way. It could go either way here. This could be your first, second, third tap, or what I'm thinking, actually, I take back what I said. This could be your first, second tap up here, actually. Now you gotta put your range to this. Now your third tap, honestly, this is still considered extreme supply. Yeah, because we do have supply up here, DL tool. Yep, this is all supply. We can we could still get that model 2, or it would actually be hella clean. We get this. Grabs the supply up here at 135-ish, and then it comes down. I kind of like that better. And then this would be your boom. And this would actually hella correlate with ELF. Just that ELF looks way cleaner for the accumulation up. And I'd probably rather be in this chart than Este. But Este is still a decent chart. Yeah. Especially because this was market maker previous distribution here at the 150s. What else wicked 150s? Pretty interesting. Damn, that's pretty crazy actually. What the heck? I actually really like this. If market makers can maintain when it accumulates right here. I should have made this a separate drawing so it's even cleaner. Okay. Market makers grab the liquidity, makes the accumulation, right? Make this green. Comes up. I would really like market makers when they make the accumulation to maintain a really nice return to zone. So when they do short, it'll just be a nice dump down. Doesn't have to be gappy like this. I mean, it would be so much cleaner if it is and so much more obvious. But looking at previous of Estee Lauder's price action, it doesn't look like that. It just looks like it's just more like leaving a clean. What did I do? Leaving clean sorry, just had a brain fart. Clean liquidity for market makers to sweep. See, this is actually interesting as well. So market makers did a previous accumulation here back in 2018, right? Market makers rejected off of it. I mean, sorry, bounced off of it. So this is obviously considered a very crucial level. The same time where this is the level here at the 130s, yeah, 130s to 140s. This is going to be hypothetically where market makers are going to reshort this right here to go down. I like that.